In this video, we'll uncover various strategies that can help you enter the investment game without fronting cash. But remember, while these methods don't require money, they do demand something perhaps even more valuable: your creativity, time, and dedication. We'll explore different approaches, from leveraging sweat equity to using high-tech micro-investing apps and even exploring creative bartering methods. Before we jump in, a quick note. These strategies involve risks and require smart planning and persistence. They're not overnight miracles, but with the right approach, you can indeed start your investment journey with no cash in hand. Let's get started and unlock the potential of investing with zero down. Number 1. Understanding the basics. Investing might sound like a game only the rich can play, but at its core, it's simply the act of putting resources, time, energy, or money into something now, hoping it will grow and yield more value over time. Whether it's stocks, real estate, or a startup, the goal is to get back more than you put in, making your financial future brighter. However, the catchy phrase "no money down" can be misleading. It suggests that you can gain wealth without any initial investment, feeding into the fantasy of getting rich quickly with zero risk. The reality: while it's possible to start investing without writing a big check, it doesn't mean there's no cost. Instead of financial capital, you might be investing your skills, time, or creativity. These investments are just as valuable as money and often require more personal energy and commitment. For instance, sweat equity, where you offer your work and skills instead of cash, is a common way to invest without financial input. This could mean helping a new tech startup develop its software in exchange for a share of the company, or renovating a property as part of a real estate investment deal. Both scenarios require hard work and a specific skill set rather than traditional cash investment. Another commitment involves learning and staying informed. The world of investing is complex and ever-changing. Tools and techniques that can help you start with little or no money, like micro-investing apps or crowdfunding platforms, need understanding and smart strategies to really pay off. Number 2. Strategies to start investing with little to no money. Let's explore viable strategies such as sweat equity investments, high-leverage investment options, crowdfunding investments, and micro-investing apps. Sweat equity refers to the contribution of your labor and skills instead of cash. This method is particularly popular in startups and real estate. For example, if you're a developer, you might offer to create a website for a new company in exchange for a stake in the business. In real estate, you could provide your skills in home renovation to increase a property's value without initially investing money. Your potential benefits: it allows you to utilize your unique skills as capital, opening investment opportunities that might otherwise be inaccessible. Your potential risks are that your return depends on the success of the business or property value increase, which can be unpredictable. Additionally, your time and effort do not guarantee success, and you may not receive any financial reward for your hard work. High-leverage investment options. Leverage involves using borrowed money to enhance potential returns of an investment. Real estate is a common field for leveraging, where you might use a small down payment to control a large property. Another option is trading stocks using margin, which lets you buy more stock than you can afford with cash on hand. Your potential benefits: it magnifies your potential returns significantly and allows you to make substantial investments with less capital. Your potential risks are that just as leverage can amplify returns, it can also magnify losses. If investments don't pan out, you are still liable for the borrowed funds, which can exceed your initial stake. Crowdfunding investments. Platforms like Kickstarter, GoFundMe, or real estate-focused sites like Fundrise allow individuals to invest in projects, products, or properties collectively with other small or micro-investors. This can be anything from helping a new invention come to market to investing in a rental property. Your benefits include providing access to investment opportunities in diverse fields with relatively small amounts of money. It also spreads the risk among a larger group of people. Your potential risks include the fact that the success of your investment is highly dependent on the project's overall success, which can be volatile. Additionally, some investments may be illiquid, meaning you can't easily withdraw your money. Micro-investing apps. Apps like Acorns or Stash allow you to invest small amounts of money regularly, often by rounding up your daily purchases to the nearest dollar and investing the difference. Over time, these small contributions can compound and grow into significant amounts. Your potential benefits are an easy and almost unnoticeable way to build an investment portfolio. It's also a fantastic method for beginners to learn about the stock market without significant risks. Your risks include the fact that growth can be slow due to the small initial investment, and fees may be proportionately higher compared to the investment amounts, potentially eating into profits. Each of these strategies offers a unique way to potentially grow your wealth with minimal financial entry barriers. However, they all come with their own set of risks and require a commitment beyond mere capital, be it in the form of time, skills, or the ability to handle potential financial losses. The key is to understand these strategies deeply, assess your own capabilities and risk tolerance, and then proceed with a well-informed plan. This approach maximizes your chances of success, turning minimal initial investments into significant financial returns over time. Number 3. Creative no-cash investment techniques. Investing without initial capital can also be achieved through innovative non-monetary methods such as leveraging personal networks, bartering skills, and utilizing programs offered by governments or NGOs. These techniques harness different resources as substitutes for financial investment, and each has unique advantages and considerations. Leveraging networks. Your personal and professional networks can be powerful tools for finding investment opportunities. Networking isn't just about meeting new people. It's about exchanging ideas and spotting opportunities where you can contribute and benefit. For example, a friend starting a new business may need marketing expertise. By offering your skills, you can negotiate a share of the business in return. This transforms social capital into a real investment opportunity. The benefits are that you are using existing relationships to find opportunities, potentially with low competition. The risks are that mixing personal relationships with business can sometimes lead to conflicts or strain. Bartering skills. Bartering your skills or services is another clever way to invest without money. This age-old practice involves exchanging services that you can provide for something valuable in return, such as a stake in a project. For instance, a web developer might build an online store for a budding entrepreneur in exchange for a percentage of the sales generated through the platform. Your benefits are that it allows you to invest your expertise instead of cash, making your skills the currency. The risks are the potential dependency on the other party's success, and the tangible returns can vary significantly. Government and EnGo programs. Many governments and non-governmental organizations offer programs that facilitate investment opportunities for individuals who lack initial capital. These programs might include grants for small businesses, subsidized loans for real estate investments, or even tax incentives for investing in renewable energy projects. Participating in these programs can provide a significant boost with minimal financial input. The benefit is that you can receive low to no-cost financial support, which helps to minimize your personal financial risk. The potential risk is that it often involves navigating bureaucratic processes and may come with specific conditions or obligations. These creative investment techniques demonstrate that capital extends beyond mere money. By tapping into networks, bartering skills, or leveraging supportive programs, you can initiate valuable investments that contribute to your financial growth without the need for upfront capital. Each method requires a clear understanding of the terms and a strategic approach to mitigate risks while maximizing potential returns. Number 4. Getting started on your journey. Starting your investment journey with minimal financial resources requires a thoughtful evaluation of what you can offer and a strategic approach to leveraging those assets. Here's how you can begin. Start by assessing your skills, time availability, and any potential partners or networks you can tap into. Are you a tech whiz, a marketing guru, or a handyman? Your skills are valuable assets that can be invested. Also, consider how much time you can dedicate to a new venture. Being realistic about your current capabilities and resources is crucial for finding the right investment opportunities. Choose a suitable investment approach. From the strategies discussed, sweat equity, leveraging, crowdfunding, and micro-investing. Select the one that best matches your skill set and goals. For example, if you have a strong network and are good at promoting projects, crowdfunding might be the way to go. Alternatively, if you're skilled in a trade, investing sweat equity into a real estate project could be more suitable. Match your personal strengths and resources with the investment strategy that optimizes them. Set realistic goals. It's important to set achievable goals and have patience. Understand that returns from investments like these may not be immediate and can vary greatly. Establish clear, measurable objectives and a timeline for achieving them. This might mean setting a goal to acquire a certain amount of equity in a startup within 2 years or to renovate and flip your first property within a year. By methodically assessing what you can bring to the table, choosing an investment path that aligns with your strengths, and setting realistic goals, you can embark on your investment journey confidently and effectively. Remember, the key is persistence and continuous learning. The more informed and prepared you are, the better your chances of success. Investing with no money down is more about creativity and leveraging non-monetary resources than it is about having significant capital. Don't wait to start your investment journey. Take the first step today, using the resources at your disposal. Remember, the best time to plant a tree was 20 years ago. The second best time is now. Let's make it happen. Thanks for watching. If you found this guide helpful, please hit the like button, subscribe for more, and turn on notifications. Don't miss our next video. Start your financial growth journey with us today.